are you guys telling your clients at Nuveen?
Part of what we're saying is, A, stay calm. We don't think cash is the right place to go in this environment. We're actually saying, if you find your portfolio is kind of out of whack with your long-term goals, consider rebalancing. That might be some of what we saw today. Why is the 10-year Treasury up so much? It might be having people rebalance out of fixed income into areas of the equity market or other areas of the bond market.
Or maybe raising cash.
Could be raising cash, too. I mean, the fact that bonds and stocks are selling off together is disconcerting because it means even those safe havens in the equity market, like utilities, staples, REITs, those are going to get hit anytime the 10-year rises by as much as it did today. But we're not getting more defensive than we already were. We came into this position for a not-so-great year for the stock market. It's been a lot worse than we expected, but we're not getting more defensive. We're also not looking to kind of bottom feed and try to time the bottom at this point. We still think there's more bad news to come.
Hey, Josh, it's only been a few weeks since Dalio said cash is trash. Now people are going to hear cash is king. What is the role of cash in a portfolio right now? What's a decent level?
I think cash plays the same role in a portfolio as fixed income, specifically short-term Treasury bonds. The role that they play is ballast. They are two things. Number one, they keep the volatility from becoming overwhelming when you look at your statement or log into your account and just glance at the balance, because in markets like this, they tend to move opposite of what stocks are doing, maybe not every hour of the day, but in general. Number two, they are the optionality. They give you the ability to do what your guest there is suggesting, which is rebalance from what's gone up and add into what's gone down. And my suggestion I would add to that is to do so systematically. So if you're one of these people that's saying to yourself, you know what, the Dow at 23,000, I think we're going to end up at 20,000 and that's where I'm going to buy. I got news for you. If in fact we get there and it's conceivable, the news ain't going to be better. If anything, things will look even scarier, and you will be even less likely to make that decision to pull the trigger at Dow 20. God knows what's happening there. So automate that decision. Your rebalances should be on a predestined schedule, and so should your allocations. Money moving from your bank directly into whatever account you're investing through. That's the way to get through this, not sitting there and trying to divine what the perfect opportunity will be to buy. Because at that perfect moment, things will really look bad in the headlines.
Was there a headline, Mike, that was the fundamental reason the market took this precipitous fall today?
No, I don't think so. I think
a lot of people have been sending me this Reuters story that the White House told Federal Health Agency to classify coronavirus deliberations. It's a report. Yeah. It's according to sources. I know. I just wonder how much is the response.
To make them classified, in other words.
Correct. Yes. To classify deliberations about what the administration was doing about coronavirus.
I think it didn't help, obviously, but I honestly think it's just also the ongoingness of this information deficit that we have right now. It's also, it's been this slow motion panic, and I say slow motion. It's been, 20 days or something like that since the top of the market. It's not the way bear markets normally start. Normally, the market tries to sniff out a weakening economic trend and parts of the market start to run rack. No, this was a break interrupting what was, by all accounts, a pretty decent reacceleration in the economy. So that's why the adjustment has been kind of sudden and oppressive to this point.